Hello, good evening, and thank you everyone for
Hello, good
coming.
evening, everyone.
Hi, Shafiq.
Good is. Hi.
Long time no see. It's
Yeah.
yeah. How are you lately?
Um, I have a sore throat a bit, but yeah, not a big issue, right?
Okay,
Hopefully, everything is smooth for today's session.
all right. Everything for sure will be smooth lah.
Yeah, for sure, for sure.
So tonight we have a very interesting company. In fact, we have hosted this company before 1 year ago by Rondi and MJ,
Yeah,
and it's also the only Australia cross-listed company with the ASX and Bursa Malaysia. So there's a very exciting session, as well as their involvement in the mining as well as smelting and processing of um, various commodities. So I think without further ado, I'd like to invite Adrian, the managing director of OM Singapore. Hello, Adrian. Good evening.
Hello, hey Darren, say
hello,
Shafiq.
hello,
Good
Adrian.
evening.
Hey. So glad to have you back with us after 1 year, the second round with Stockbit.
Second round is a bit.
Yeah, it's been a very exciting year with the markets.
Yes, with all the rise and falls of the different market forces. So
That's right. That's right.
mm,
Yeah, very happy
yeah,
to take everyone through again.
yeah. Okay, so I think we shan't hold the floor any longer. Yeah, Shafiq, and I will leave Adrian to do the presentation.
Great,
Yeah.
thanks.
Okay, Adrian, the floor is yours.
Okay, so look, thanks everyone for making time, 9 o'clock in the evening, to listen to our story. And I'll just jump straight into the presentation. Probably take about half an hour. Leave more time for Q&A. So, on the first slide, you can see our plant. Again, that's in Sarawak, Malaysia. Okay. Okay. So OM Holdings is today very much a smelting company. I think, we heard our hosts mention that, we sort of span the whole commodity chain. We have a bit upstream, bit downstream. But I think today the central focus of the company is in smelting, and revolves around two elements: manganese and silicon. And the entire premise behind our operations, is the sustainable hydropower. Not only is it cost competitive, it is also renewable. So that's really the sort of core focus of the company today. Like what Terence said, we are cross-listed on the ASX, so primary listing, and also on Bursa Malaysia. And I think we are, we were the first, and I think we still remain the only company to possess this status. But without a doubt, we are the only ferroalloy company listed on either of these exchanges. So what we do, ferrosilicon, ferromanganese, silicon manganese, these ferroalloys are actually quite niche. And they're produced typically, the world's largest producers will be countries like Russia, China, Ukraine, India. Recently, quite a few of them have been in the news. And so this part of the world listed on the ASX and Bursa Malaysia, it's really quite rare and niche. So we are the lowest cost quartile smelter, a bit of a mouthful, in this part of the world, and increasingly, given the sort of rising cost of energy, not just in this part of the world, but on a global basis as well. So, our operations span sort of typical commodity countries, but with a focus, obviously, in Asia, where we are based. Okay, the key sort of operating entities or sort of assets of the company today, right on top, you see OM Sarawak, which is in Malaysia. This asset is now 75% owned 25% is owned by our JV partners, Jaya Mata Sarawak, or CMS. And we recently announced that we have entered into a binding sale and purchase agreement to acquire the remaining 25% stake of that company, of OM Sarawak. And this is for a consideration of $120 million US to be completed this year. Okay, so that is OM Sarawak, and that's really the sort of key asset of the company today. Below that, you see Qingzhou, China. So this is really actually a smaller smelter that we first started, I think maybe more than 15 years ago. It was really our sort of first maiden foray into smelting, and get our hands dirty and understand the dynamics. So this plant actually is closed right now, but there are some opportunities, and we can talk about that if the audience is interested later on. The bottom left, we have our upstream, which is exploration and mining. And so, if you're familiar with the company, you will notice that we actually ceased mining in Australia, 100% owned asset, in December last year. And this is because the mine essentially has sort of run its course, and we reached the natural end of life of the mine. We also own 13% of one of the world's largest manganese ore mines. And that is the Chippy Boa mine that's in South Africa. And so through a JV structure, we effectively own 13% of that mine. And so that is quite a big mine, with a sort of production capacity of 3 to 3.6 million tons per annum. And so finally, to sort of round out the show, we have our distribution business, and that's based in Singapore and China. So there's distribution, logistics, and also a bit of procurement. Okay, so just a quick refresher for those who have sorry, excuse me, who've been following the company, or may not be familiar with the products. We used to mine manganese ore, and it's actually fourth most consumed metal behind some of the most common, the more common metals such as iron, aluminum, copper. But as its name suggests, it is used to produce manganese alloys, right? And so that is the raw material for manganese alloys, the middle column. The last column, silicon alloys, is a kind of ferroalloy that's produced using quartz as the raw material, as the ore, if you will. And so together, manganese alloys and silicon alloys, these are the products that are produced at our smelter in Sarawak. Okay, and so again, just a quick reminder: ferroalloys, how are they used? They are used in steel making. So all steel making in the world cannot be done without ferroalloys. So the analogy I think I've been giving is it's like restaurants using salt. They have to use it, but it's such a small sort of cost component, in the scheme of things, and it's irreplaceable, just like salt. You can't work your way around it, and it's actually consumed in a fixed percentage. So typically I would say for every metric ton of steel that's produced, it doesn't matter whether it's sort of very, very basic low grade steel used in construction, or it's like high end steel. Sorry, it's typically around 1 to 2% of that weight, right? So for every 1 metric ton, 1,000 kilos, it's about 10 to 20 kilograms of ferroalloys consumed to make that steel. Okay, so this is just a picture of the Bakun Dam. So this is the reason why we're in Sarawak. So between the Bakun and Murum hydroelectric projects, it's 3.3 gigawatts of power, and Sarawak Energy is sort of still expanding their capacity and building new hydroelectric plants in Sarawak. So smelting, again, sort of going back to what I was saying earlier, it's all about the processing. And when you think about sort of ores that you mine from the ground, you have to sort of melt it down under, incredible temperatures. And, the sort of internals of the furnace can reach up to 2000 degrees Celsius. And that is why actually smelting is such a power intensive process, and why the cost of power is quite critical in determining your cost competitiveness. So if you look at the chart, this was done pre-COVID, it's been some time now, but you can see, number one, that the cost of power as a share of the total cost is very high. The orange part is the power. And, obviously we're sort of at the bottom of the cost curve. This is a total cost basis delivered We chose Japan as a hypothetical example here because they're such a big steel producing country. And so, between sort of pre-COVID and now, what has changed, right? Our cost of power remains the same because our power is 350 megawatts of power that has been contracted for 20 years. Okay, and so what that means is it's a fixed price. There are no moving parts. So although the power is increasing from year 1 to year 20, we know exactly how much it will cost in say year 18. So there are no moving parts. Now, if you contrast that against the rest of the world, if you look at Europe today, what they're paying for power, especially when you look at the sort of situation with natural gas, then you can sort of see how that price difference, the cost competitiveness has in fact widened between what you see on screen and what the current situation is. So it's not just Europe. I think we're seeing this across the board, and most noticeably in China as well, where in for example, when we look at Asia. For ferrosilicon, the two main exporting countries of relevance besides Malaysia would be Russia and China. And I think when you look at China, I think we were just talking about this, but 1 year ago when I last did the session with Stockbit, I think we were sort of at the cusp of the power crisis in China that happened, I think, towards the end of September. And after that, because of the power crunch in China, actually, ferrosilicon prices doubled. It had already doubled once, and it doubled again, I think, towards the end of September. So that's gives you a sense of how the entire cost structure has changed between sort of pre-COVID to today. And I think it has changed in a very structural way, structurally meaningful way. You just have to look at the policy changes that have been put in place. For example, in China, after the power crunch at the end of 2021, they actually liberalized their power policies for industry. And so that means that they're actually paying a floating power now, right? They're paying market price for power and no longer paying the price that is set by the state. So a lot of these things have changed, and I think that actually entrenches the cost competitiveness of what we're doing in Sarawak. Okay, we've been listed in Bursa for just over a year now, and so we actually launched our inaugural sustainability report this year. So I'm not going to go through all the points, but essentially these are the key targets that the company has set for the E, the S, and the G for 2022. And I think we will, as we progress on this journey, there's a lot to learn, a lot to absorb. But we will double down, on our commitment towards ESG. I think for a smelting company, a company that is, labeled as a commodity company and sometimes as a company that needs to control its emissions, for example, the focus really is on how do we do what we do, because first of all, it's essential for steel, and without steel, modern living as we know it is not possible. How do we do what we do in a more sustainable way, and how do we do it with sort of the minimal carbon footprint, throughout the life cycle of the product? And so that is what the emphasis is today. We have not actually set a sort of carbon neutral target because as of today, we don't know how it can be done, meaningfully. So I think as we go on this journey and sort of set out what the roadmap is, we'll be able to sort of update the market, update investors on sort of this, environmental journey, if I can call it that. But, right off the bat, if you look at the chart, we have listed our Scope 1 and Scope 2 emissions for both ferrosilicon and manganese alloys. The last few years, it's been quite consistent. But I think what's interesting is that our Scope 2 emissions, so that's the power, that's the sort of carbon dioxide that's generated from our power source, is 75% lower compared to conventional smelters. So when you look at the countries that I mentioned earlier, when you look at the majority, I'm not saying all, but the majority of Chinese plants, Russian plants, Indian plants, coal-fired ones, we are 75% lower in terms of our carbon footprint from the power source. Okay, and so without further ado, I'm just going to jump into our earnings, for the first half of this year. So we used to present our financials in AUD, Australian dollars. So do take note that with effect from Jan this year, we have actually changed that to USD. So if the number looks smaller, it's in USD. There's no special reason. So do take note of that. So I think if you look at the top line numbers, revenue for first half of this year compared to last year, right? Obviously we did better. So without a doubt, it's just I think we're very, very lucky with the price situation. After it sort of reached a peak in September last year, it's come down. But as you'll see in the next slide, it was actually briefly supported in somewhere between Q1 to Q2 this year. And the reason for that, if you sort of link back to what I said earlier, Russia and Ukraine are actually the second largest exporter for ferrosilicon and manganese alloys respectively. So the conflict actually did help support prices for a while because people were very uncertain as to how the conflict would play out and whether or not these countries would be able to continue exporting their ferroalloys. And today it turns out that yes, they can. So prices sort of softened towards the middle of this year, and so off the back of that revenue, earnings improved a lot. Our adjusted EBITDA is close to $100 million US, and a profit attributable to owners came in at about $50 million US. So it's not surprising that it's better than the first half of 2021. But how does it compare against second half of 2021? And so the good news is that actually even though prices came down after the peak in October last year, we were able to sort of ride our wins and sort of lock in a lot of future contracts that were only delivered in the first half of this year. So not only that, we were also able to sort of optimize our production and sort of plan our scheduling, our scheduled maintenance in such a way that we front-loaded production this year, and as a result, sort of captured more of that margin in the first half earnings. So I think it's the earnings speak for themselves, but I think what's more important is when you look at cash generation for operations. We generated about $70 million US from operations in the first half of this year. So if you look at our cash generation last year, actually, in this first half we generated more cash than we did in the full year of 2021. So I think again that gives you a sense that all the earnings that you see are very, very tied very, very closely to cash generation. And typically that is the case. Cash flow from operations is always very close to adjusted EBITDA numbers. Okay, so this is a sort of quick recap of what the market did last few months. A quick review as well as a sort of quick operation update. It's not dissimilar to what I've done in our public webinars, but sort of just to go through sort of recent market activity again. I sort of shared that if you look at the chart, there's only one huge peak, and that was in September, October last year. Prices then came down, and there was a sort of second peak in Q1 this year because of the conflict between Russia and Ukraine, and then has sort of since softened since. And the reason for that, there are a few reasons. The sort of few points on the slide as well, but number one, I think there was an overreaction in the last 12 months, which led to a lot of inventory being built up. A lot of people were so afraid of fragile supply chains and sort of shocks to the system that they took a lot of inventory. So this is one. And two, I think with the direction the sort of global macroeconomy is heading now, with what the Fed is doing, with the uncertainty in Europe, and some people speaking of like demand destruction. I think this is sort of the macro environment that sort of sets the backdrop for a lot of the action that's happening in commodities. A lot of people are holding back purchases. A lot of people are unsure what their production plans are in the next year, or for that matter, even the next few months. So I think this is sort of the reason why things are slowing down a lot, and I think we're really actually heading into the next cycle, right? That this boom cycle is over. We're very fast approaching the part of the price cycle where people are cutting production. So, as a result of these changes in the prices, and the latest, so ferrosilicon price on the screen, you can see 2116. That was June first half closing, and silicon manganese was 1546. You can see on the screen. Today, ferrosilicon prices are probably closer to 1650 to 1700. Silicon manganese prices between 1050 to 1100. According to what S&P Platts is reporting. So prices have come down, and as a result, a lot of the producers have also shut production. So if you look at China, I think month on month, they easily shut down maybe 20 to 30% of output. So that at least for the marginal producers, the cost level has been hit. And likewise for Indian producers, depending on region, I think I've seen upwards of 40% production cuts. So all of that tells us that we're sort of really well into the way, the next phase, we're into the next cycle. Okay, so in terms of operations, can't control prices, but operations, that's something we can control. So like I shared, we front loaded the production target this year into the first half. Our guidance for this year still remains 340,000 tons to 360,000 tons of ferroalloys, and you can see the realized number on screen. So 69,000 tons was done for ferrosilicon, and for manganese alloys, 121,000 tons. So the reason again why we front loaded everything was one, prices were better, and two, we actually had this maintenance schedule planned around our conversion plans. So we actually are doing four furnaces under conversion this year, and two of them are ferrosilicon going to manganese alloys. That's been done, and silicon metal will be sort of on track for end of this year. So I'll share more about that at the last, I think in the second last slide. So quickly going through the numbers, I think in the first half of 2022, we actually, I think, achieved one of our highest ever GP margins at 27.7%. And again, I've already spoken about revenue being higher than what we did last year. But I think what's more meaningful is to look at the sort of EBITDA breakdown, and there you can really see smelting is one, the dominant contributor to the group. Sort of going back to what I was saying earlier about the company so transitioning to becoming really a smelting company with a little bit of upstream, a little bit of downstream, as compared to the past when you look at 2018, where a lot of the earnings were coming from mining. So that's one. Number two, we have always had stable contributions from our trading business, which is more logistics and distribution, as well as from our associates. So that is sorry, the associate contribution is coming from the Chippy mine in South Africa, where we hold 13% stake. Mining, unfortunately, we were still, the mine is still under care and maintenance, pending the commissioning of Ultra Fines plant, which, this UFP is basically designed to take all the waste that we have produced, over the last 10 years and recover all the residual manganese units, and sort of either sell that or ship it to Sarawak to be consumed. And the reason why, it's still under care and maintenance is that the UFP actually had to be re-optimized. A lot sort of engineering work had to be done, and a lot of these parts are taking a long time to be shipped from where they're fabricated. So we expect that this probably will be pushed back into 2023. Okay. So looking at sort of the overall cash position, debt and cash position of the company, we have reached 0.54 gearing ratio. So we've come a long way from, sort of 3.05 in 2016. And the aim now, I think, is to, because Sarawak is already, it's not a greenfield project. It's not an untried, untested sort of setup. We are looking to sort of transit into a more stable sort of debt structure, instead of what we have now, which is sort of a project finance arrangement, which is restrictive, number one, and number two, doesn't really allow the company to sort of target an optimal debt level, right? And so I think that is something that we are looking to do in the next 1 to 2 years, depending on what macro sort of conditions will look like. So besides debt, which we're trying to sort of refinance and target an optimal level, when we look at the cash movements for first half 2022, we are still, until we reach that stage, we are still paying down debt. So we paid about 36 million. 36.9 to be precise, of debt, which largely comprises of the Sarawak project finance loan, as well as a revolving credit line for raw materials, again, for Sarawak's consumption. Okay, so with that, I'm just going to talk briefly about, the equity side of things. So I'm not going to talk through the numbers, obviously, but I think the key thing maybe would be the sort of P ratio you see at the bottom left of the screen, which, based on trading 12 months earnings, we are now standing at 3.39 times. So, I think the number speaks for itself. I think something that has been brought up very often, both from retail investors as well as much larger institutional investors that have been looking at the company for a while, is what is the dividend policy of the company? And I think we've always said that because we are still a growing company, there's still a lot of things we want to do. We have never really pinned down and announced a committed dividend policy. So I think that's something we're working on. Obviously, we're not going to suddenly distribute all the earnings because there are all these growth plans and milestones that we have sort of set for ourselves. But we do want to formalize something to say, okay, until we complete our growth plans, we're going to say pay out X% of net profit after tax, and once we complete those plans, then we're going to pay out say Y% of net profit after tax, and so hopefully this will give a lot of investors a lot more clarity in terms of projecting cash flows and sort of realized earnings, I guess, in a sense. From the stock, so that's something we're working on. Both, overall in terms of the capital structure, we're looking at both what we'll do with debt and as well as what we'll do with equity side of things. Okay, so with that, I think we have the last two slides. So very quickly, this slide has been there for a while. 2022, if you look at the column, our plan has always been to convert 4 furnaces. So +2, you can see from ferrosilicon to manganese alloys was delayed for a year because of contractor issues, visa issues last year. I think I shared about that last year as well. But now these 2 furnaces have been completed, has been delivered, and they have both been commissioned. I think in June and July respectively. Okay, and then the last 2 furnaces to be converted from ferrosilicon FeSi to metallic silicon METC. You can see there, and so these 2 are due to be commissioned at the end of the year. Hopefully, we will be able to do that in December. Otherwise, probably December, January, and from there on, probably will take 3 to 6 months just to optimize and sort of fine tune production. So that's all the plans for 2022. Really, it's a year of doing conversion and maintenance. And beyond 2022, I think the plan is to expand our manganese alloy smelting capacity. And to do that, the idea is to build 2 more new furnaces. This obviously will be conditional on sort of how we fund it, but probably will be again in the next 1 or 2 years. And so, with all that said, right, I think that will bring our total plant output to be about 600 to 640,000 tons per annum. Okay, so that's the bottom right hand corner. You can see the number there. But for manganese alloys, that will bring our output to something close to 500,000 tons, and so then that brings us sort of to a different scale altogether. Because if you look at the sort of total traded market volume, in a sense, the addressable market for manganese alloys, I think we're looking at something like 3 million tons. And so 500,000 tons of output just from a plant alone will probably make us one of the world's largest producers of manganese alloys. So that's the vision. That's a roadmap for now. We should be able to deliver everything we set out to do in the next 1 or 2 years' time. Okay, and so which brings us to the last slide. OM Holdings today is very different from where we were 2 years ago. And I think it's a much simpler story now. We have, just think about the mining and the distribution. It's sort of good to have parts of the business. But if you just concentrate on smelting and look at the earnings, someone asked recently, so what's in store now for OMH after the commodity sort of boom has run its course, right? And to which I think, I replied, it's never about the last cycle. When you look at the sort of commodity prices, you never know when the boom is coming. And the whole idea is to be positioned in a place where you look at the company's fundamentals. Can it ride its wins, and can it sort of stomach the losses during the tough times? And which I think we have proven through the last cycle, last few cycles, in fact, that during very, very tough market conditions, we are able to sort of control our costs. And during times when prices are very high, we're able to sort of ride those wins, right? So like I said, prices peaked in September, October last year, but we are still sort of riding, in the afterglow of that price peak effectively. So I think that's the key message. I think it's always about the fundamentals, and it's always about what are my long-term average margins. And I think today we're in a position where those margins are a lot more defensible compared to, say, just a year ago, because of the structural changes in power, in sort of taxes and geopolitical issues around the world. And again, I think Malaysia is a very, very friendly jurisdiction for commodity producers. Unlike China, we don't have a lot of we don't have to pay the Trump tax exporting to the US for one. So I think it's a much simpler story, and really is just about margins times volume. And I think in terms of volume, we've shown that we're able to sort of deliver what we set out to deliver. So with that, I think we've come to the end of the presentation. I think to about half an hour. So okay, just nice. Can leave more time for Q&A now.
Okay, thank you so much, Adrian, for the in-depth presentation, going through the whole journey from last year, before that, until now, and being giving very good insights about the condition of the situation of where we are in at the moment for OMH, as well as the larger market macro factors.
Thanks, Terence.
So, yeah, thanks a lot. Maybe Shafiq, you want to start off with the first question first?
Yeah, actually, let's start with a question from the floor, right? A very random question, just breaking the ice question, right? What OM stand for?
Yeah, I mean, it can stand for anything you want it to stand for today. It's like, but I think a long time ago, it used to stand for Oriental Minerals. So that's I think ancient history right now. It can stand for OM Manganese. That's a good one. So.
Okay,
cool.
all right. Cool. Okay, so let's see, how should we break down this Q&A session? Maybe we'll touch a little bit on your different divisions before going into more of the industrial sort of outlook kind of thing. Right, and maybe we start off with this your mining division, right? Like right now, the mining division, basically, as you pointed out, is under the care and maintenance, something like that, for your ultra fine smelts.
Yeah, that's
so,
right.
Mm-hmm. So what's this potential contribution from your mining division, once this has been completed?
Yeah, I think the way to think about it is okay. So maybe just to give a sense of scale, I think we are probably going to be able to produce 6 to 7 million tons of product from this recycling recovery process, right? And we are, in the past, we used to export 800,000 tons a year. So probably the ultrafines plant will be a quarter of that size, about 200K a year, and that will take us 6 to 7 years was what I meant to say. It's not 6 to 7 million tons. So 6 to 7 years of 200,000 to 250,000 tons of output. And the earnings contribution, the right way to think about it would be I'm producing a product, it's still a product, at very marginal cost because it's really just the cost of the UFP plant recycling that from the waste. So in a sense, the earnings dynamics will not be too different from what it used to be. Obviously, I think we are cognizant of the fact that freight rates are not where it used to be. So in the past, I think maybe exporting from Australia to China, Sarawak, maybe low teens, $15 maybe per ton. Today, it's probably, well, I don't know, double, triple that. And so I think, in a sense, the earnings will be affected by freight, and I think that is actually the largest driver of what that is able to contribute. But on the sort of defensive side, that material can be completely used in Sarawak. So we have that natural synergy there where I can have the optionality, right? Because if prices are really, really high, freight is really, really low, I can sell it. Otherwise, I can just consume it in the plant. So that is on the 100% owned entity, OM Manganese. We have a few other smaller projects such as Briar, Mile 701, and these are like sort of JV farming arrangements where we are contributing capital to earn equity in these projects, and they're not going to be the size of what our original mine was. But with a few of these added together, they're all in Western Australia. I think we'll be able to sort of create a meaningful sort of Western Australia manganese business. But again, these are still in exploration stage. It will be a few years before we deliver a resource statement and take it to production. I will say that the one that is most advanced is Briar. Briar is also a listed company, listed on the ASX and BRYAH. And so they've been putting out a lot of information on these results as well.
All right. Okay. Great. Briar, the same one that recently, I believe, you made some announcements on the manganese drilling success.
Correct. That's right. Yeah.
All right. Okay. Okay. Great. And I think we actually answered Isabel's second question. So I think you already answered this. So
Yeah.
yeah.
That's right.
Yeah, that's right. Okay, let's see what's next on the mining division. So you mentioned that the existing supplies that you have is approximately can last you another 6 to 7 years of 200,000 tons, million tons. Okay.
200,000 tons, not million.
200,000. Sorry, yes, 200,000.
No worries.
Okay. Let's see what other questions have we got on the mining segment. Nothing much on the mining segment anymore. Okay, so maybe we move on towards the this what you call the capacities and also the smelting segment, right? Of your ferrosilicon and manganese silicon. Like right now, with do you foresee or are you seeing reducing demand for these products?
Short answer is yes.
Okay.
I mean, so like there's reduced demand, I think, across the board really, because so I think it's coming from two things really. So one is, I was just saying earlier, a lot of steel makers don't really know what the production plans are, essentially. If for the larger ones, say, I don't know, Japanese, Korean, more established ones, they have a fairly rigid structure, and then they're not sure afterwards. But for the smaller ones, right, they can turn on and turn off very quickly, and for those it's even more uncertain. So one is steel margins have come down, so obviously they're scaling down production, and therefore demand is reducing. This is one aspect. The other aspect is the sort of psychological element, where in the past, say, I don't know, 2019, maybe they were keeping 1 month of inventory, safety stock. Then 2020, 2021 happens, prices go crazy, number one. Number two, shipping goes crazy. So they say, okay, I'm going to keep 4 months of inventory now. And then all of a sudden their production goes down now, and then people say, okay, I have no idea how long I'm going to be in this stage. So they go from 4 months of inventory now to say they're trying to target 1 month, but the 1 month of inventory is even lower than what it used to be. So it's this huge unwinding, in a sense, deleveraging effect that we're seeing. And I think this effect is quite significant because it can mean someone not going into the market for say 3 to 4 months, and so that demand is gone. Instantaneous demand is gone. So I would say across the board, we are seeing this happening most drastically in Europe, just given a lot of the uncertainties there. I mean, understandably so, right? And besides that, I would say Southeast Asia and East Asia, demand has been quite depressed as well.
All right. Okay. Thank you. Earlier you mentioned that some of the smaller players can, turn off, turn on their furnaces quite easily. Would you say that for your own furnaces, you could also be quite agile in meeting the demand or supply of the product?
Yeah, so maybe just to sort of correct what I said, I guess it's not really a binary sort of turn it on, turn it off, but like they will adjust, say, try to push plus 10%, minus 10% kind of adjustments. And so that's something that we can do as well. The only constraint that we have is our power is take or pay. So if you don't take, you have to pay. And there is a buffer within which is okay, but then anything that you go below, for example, I think during the COVID period, even until now, we are actually utilizing below the stated capacity of 350 megawatts. And so that power actually, part of it we paid, and that is in inventory. So when you see the inventory numbers go up, actually, a lot of that is power.
All right. Okay. I see. So actually your 350 megawatt, even if you don't use up all of it, you actually still have to pay for that amount.
That's right. Yeah. It's
okay.
a fully
It's the agreement you sign.
Yeah. That's right. So it has its pros and cons now.
Okay. All right. Thanks. Shafiq, maybe over to you.
All right. So I have a question that kind of similar with a question from the floor here, right? So what is the average utilization for smelters at the moment?
Yeah. So simple number is 75%. So we are on a full year basis, it should be around 75% utilization. I think towards the first half of the year, I'll have to sort of do the sums and look at the numbers, but I think we were probably closer to 80% at the start of the year, and then second half probably a bit lower. But full year is 75%.
And what is the cost per ton for ferrosilicon and silicon manganese?
Yep. Ferrosilicon, I think historically has been close to $1,000 per ton. And today a few things have increased. Freight has increased, and the cost of reductants has increased. So reductants are things like coke, coal, semi-coke. So this anything that has carbon and burns basically, and the cost of that has increased across the board. So I would say today probably closer to between 1,300 to 1,400 for the full year probably. But obviously in sort of different months, it can be very different. And another thing that changes this number quite dramatically is the exchange rate, because our power is actually in ringgit. So depending on what the dollar ringgit is doing, the cost can change quite a lot. So, but I think as a ballpark figure, 1,300, 1,400 for the year would be the number I'd give for ferrosilicon. And so selling prices are 1,650 to 1,700 now. So still quite a meaningful margin for ferrosilicon. Silicon manganese is quite difficult to call a particular number because it depends on the price of manganese ore. So that's something I didn't show in this presentation. But in the past, manganese ore as the raw material for manganese alloys has been very volatile. I think the correlation on a monthly basis has been about 80 to 90% correlation with the finished product. So and the correlation is instantaneous, so no lag. Meaning, if all goes down, then selling price goes down. So obviously, when markets are going down, I'm using expensive raw material from my previous month, right? But then when it turns around, then the reverse is true. So actually, you have to look at it on an average basis. But to answer the question simply, I would say between 1,000 to 1,100. Just given the fact that oil prices were so high, it has come down a lot. So it's going to go down. And I would say probably historically our cost is somewhere between $800 to $900 per ton for silicon manganese.
All right, thanks. And Rondi asked a good question here, right? So, so Rondi said he understand that hydropower development in Sarawak is on delay, right? And probably there will be no additional power supply until 2028. Seeing the depletion of power, what's your plan to increase long-term capacity?
Yep, they have told us the same thing. So, I mean, and I mean, we've read it on the news as well. So a lot of these plans have been delayed. I think a lot of infrastructure development plans have been derailed really because of the COVID situation. But that's why we have a lot of power in inventory now. It's to be used as we sort of scale up. So there will be, I think, quite a bit. So I don't have the number with me now, nor can I share the number. But basically, there will be a period of time where we will build new furnaces. It will consume the old power that's in inventory. It's sort of in our account with Sarawak Energy, and then that will be run down now. And as it runs down, we will try to have sort of power come in at the right time. And it might not necessarily be in the form of a new power contract, right? It can be in the form of something that we announced last time, heat recovery project, where you can take the exhaust heat, right, the waste heat, and then use that to turn some turbines and generate power again. That I think will generate quite a meaningful amount of power as well. And some of the European smelters are already doing that because the exhaust heat is at the surface of the furnace, right? I think it's almost like 1,000 degrees Celsius. So the exhaust heat actually is still a lot of energy in it, and it's just being lost, right? So when you recycle that, I think that will also meaningfully allow us to expand capacity.
Okay, thank you. All right. Terence, on you next.
All right. Okay. Thank you. So let's just take this quick question from SL, which you already answered. So yes, you keep your excess power in your inventory.
Yeah.
And
I think there's also one other aspect, which is that with the cost of raw material and the selling price of finished products sort of having increased so much year on year, right? A lot of that increase. Well, okay, most of the inventory is power. That's true. Second thing is that quite a bit of that is also just the increase in price. So even if I'm still maintaining 2 months of inventory, if the raw material price doubles, then the inventory value will double as well.
all right. Okay. And some new questions pop up asking about this heat recovery technology. So a follow-up question from SL here is it how efficient is this compared to the hydropower cost that you currently are utilizing?
Right. I would say that it is competitive, on par in terms of competitiveness. And because it's really sort of upfront capex and then depreciating that, right? I think that the actual OPEX is not as high. So it is competitive, in the scheme of things.
All right. And one more from Rondi regarding this cogen technology.
I have to confess, I'm not sure what that is.
All right. Okay. Maybe Rondi, you can elaborate later, and we'll take it at a later time. Okay. Now, more questions about smelting. Yeah, that's another question asking about the maintenance cycles. So Rondi asks, wondering what's the maintenance cycle for your smelters and when does it usually take place? Is it throughout the year and how long does it
Yeah.
usually take per furnace?
So minor maintenance 1 day a month, and you basically turn off the power generation, and then you can do maintenance on the hydraulics and sort of what's above the furnace, but it's usually very hot, right? But major maintenance like what we're doing now, right, which is anything between 1 to 2 months, is a major sort of operation where you actually remove all the liquid metal. You drain the furnace, and then the lining, the sort of heat-proof lining, right? You remove the entire lining and replace it. So that kind of major maintenance that we're doing this year probably will be really depends on the wear and tear, but I would say between 5 to 10 years. Yeah, I know that's a wide range, but it really depends on how hard the furnaces have been pushed.
Okay, all right. Thank you for that. Let's see. So one moment. Let me just go through the questions that are asked.
Maybe I can ask a question first.
Yeah, Shafiq, go ahead.
Just now you mentioned just now you share your overview, right, about ferrosilicon and sorry, what is it? Manganese.
Silicon magnesium.
Ferromanganese. Yeah. Sorry, and overview about the demand, right? But what is the long term drivers for this demand actually for this type of commodities? Do you see that it will sustain over a long period of time, right? Of course, there's a probably bullet effect that affect the price in the short term, but yeah, what is your view over long term?
Yeah. So I think actually, fortunately, we are in Southeast Asia, where I think there's still a lot of infrastructure left to build. And so the long-term demand of ferroalloys is always tied to steel, right? And so then there's always a kind of sustaining steel demand in mature countries, right, where there's infrastructure that's wearing down and you have to build. And if you look at construction steel, right, rebars, any kind of construction will need rebars, right? So the thing is that there is a base load of steel demand for mature economies, but the fact is that a lot of the demand will come from economies that are growing, developing. So I think Southeast Asia is a great place to be in now. When you look at the per capita consumption of steel, so steel consumed per country divided by population, Southeast Asia as a whole, I think we're many times below, obviously East Asia, right, and even China as a whole, where it was many times below that. Even though China is a mix of developed cities, provinces, and developing cities and provinces. So Southeast Asia is one. I think another area that is up and coming is India, because India, with a lot of the infrastructure spending that they have announced and a lot of the development plans they announced, they actually said that there are certain goals in terms of steel production consumption, in the next 10 years or so. So I think, these regions will be the sort of growth regions where they will consume a lot of steel as they build out their infrastructure. But I think for us, right, besides sort of counting on and, sort of being lucky being in Southeast Asia, is really looking at how do you identify parts of the value chain that are more bespoke and customized and are less, in a sense, commodity grade, right? So instead of selling something that anyone can read on S&P Platts, the price chart, the price today, and plus minus $10, that is the price. If I can make something very high end and sort of bespoke and customized, then that price is stickier in a sense. And so to some extent, that's the reason behind doing metallic silicon, because with changing two furnaces to metallic silicon, and there is a bit of a strategic angle to it, because number one, it's used in solar, so it's a critical raw material. It's also used in sort of chemical sector where you look at silicones production and so on. And if we're able to achieve sort of higher purities, higher grades, then that price is better, obviously, and also less subject to sort of commodity grade fluctuations. So the same is true for manganese alloys and sort of ferrosilicon as well, higher purity products and so on.
Right. How about the electric vehicle batteries and all these things? Would that be key drivers for these commodities as well?
Yes. Okay. So that's a good follow up. So the entry level manganese and silicon products are used in steel, right? To adjust the specs of your steel products. The high purity versions, so 99.5% silicon, that's used in solar, like I said earlier. The 99.x% manganese, that is now a very, very sort of hot topic, and it's used in EV batteries. I think a lot of people have come out to say that, we're looking at, whether it's NMC, nickel, manganese, cobalt, or, other sort of combinations. What is the sort of demand for manganese units in that? So today, it is still small, and I think we are really trying to understand. I think we said this some time ago in a briefing as well. We're trying to understand what the cost drivers are when it comes to producing that. And so, we want to go in, with eyes wide open, and not just because it's sort of the flavor of the week or something. But yeah, that is the idea. I think if we have a good understanding of the cost drivers, and most importantly, how do you deal with the waste? Because at the end of the day, the current process of producing manganese metal or manganese sulfates will leave you with a waste that has to be stored. And unless you address that, I don't think we want to be a sort of company that's looking at sustainability, but then you leave a lot of waste in some kind of dam somewhere. So that is, I mean, those are the two aspects the two things we want to answer ourselves before we decide, okay, let's go and do, I don't know, manganese metal or manganese sulfate or something.
Yeah, that's good principle. Yeah, Terence, you can go next.
All right. Okay. Thank you. Actually, earlier you just mentioned about differentiating yourself in terms of like having more bespoke kind of non-commoditized products, and I was wondering whether your energy source being green, right? Like your products being a green metal, will that give you a sort of premium over the others, or
No. So,
no?
so unfortunately, no one pays us more. I mean, not even $1 more for having the green credentials, right? So, I mean, at the end of the day, I think some kind of carbon tax is necessary for the playing field to be leveled, and we need to incentivize a lot of the R&D work that needs to be put in, right? So, if you look at coal consumption, so basically the reductant supply chain, right? So because you have an oxide that you're trying to reduce with reductant, and that's some kind of coal or coke, you can't run away from carbon. And how do you incentivize people to, say, for example, transition into forestry management? If I can do that myself, I make charcoal in a sustainable way. I mean the sustainable and not sustainable way of doing it. And so I think until we see sort of meaningful carbon taxes out there, it doesn't make sense for people to pay you more as well, I think, because that's just not how the market works.
Okay, so that means like right now there's no real person or real body kind of tracking which one is green, which one is not green, this sort of things.
That's right. I think we sort of check all the boxes when you look at, say, ESG sustainability questionnaire for suppliers. We check all the boxes for most people. But when it comes to actually paying more, we may be a supplier of choice, but at whatever the market price is.
Okay, understood. Thank you. I think there are lots of questions on your venture into metallic silicon, your new furnace to
Okay.
start making metallic silicon. So let's start taking there. Uh, so Nick here asks, when will you start producing metallic silicon, and who are your competitors in this space?
Yeah, so I think a lot of the competition actually is in China, and metallic silicon is a, I think it was in the news recently as well because it's used in, downstream, it's used in solar. Actually, a lot of it is coming out of Xinjiang, so that's sensitive politically these days. So China is a big part of it. In the West, there are a lot of producers of metallic silicon as well, and I think. Both in Europe and the US, we see a lot of producers doing it. And sorry, and actually very often it is ferrosilicon producers that have metallic silicon production as well. So a lot of companies actually have both. And so that is in a way sort of the path we're following. And yeah, in terms of when it will be completed, I think probably end of the year, like around December. Hopefully, we will be able to start commissioning. Otherwise, January next year.
All right. And another one from SL. He asks, which silicon metal grade are you aiming to produce?
Yep, I think the higher the better. So, but look, I think if we can produce a 411 or 421, so the numbers stand for the impurities, so the lower the better. If we can produce that, then we're good for a lot of the sort of chemical and solar space. And depending on the customer, they may or may not have requests on other elements. So that's probably the goal. But I mean, realistically, we're just probably going to produce commodity grade first, and slowly try to optimize our way, through the process, because it's not just optimizing production and getting the engineers to tweak those things. It's also on your supply chains, because it's a lot more strategic when you're going high purity, right? You really want to, you can't just say, today I buy from A, tomorrow I buy from B. You want to know that every single time I buy is the same quality and no deviations. So it's also optimizing in terms of supply chains and sort of identifying the most stable I guess stability is the key thing for supply.
Okay, all right. Right, and one more from Rondi about this silicon metal venture. Do you already have clients lined up, and which verticals and which part of the world, and thus which silicon metal prices will OMH be exposed to? What's the
Yep.
percent? Asia, Europe, US.
Yeah. Okay. So the US prices are very high. There are a lot of taxes in place, and actually Malaysia now has an anti-dumping duty of between 10 to 15%, I think, that's selling to the US. So I would say that we would want to be evenly exposed to both the East and the West. And we do have a few customers lined up already, in the midst of just having preliminary discussions. But the action only really happens when you start producing. Then you can have a real commercial discussion on pricing, delivery terms, and all that. But yeah, we do have customers lined up both in the East and the West. And the idea is to have even exposure to different markets. One, because you never know when pricing differentials will move, when it will be sort of priced higher in certain countries. And number two, because it is a bit of a politically sensitive product, I think it's good to be evenly exposed at the start, so that you can move later on when things happen or things change. If tomorrow someone decides that they are going to ban Chinese imports for whatever reason, you want to have been in that market, have been supplying for a while. So I think that's really the lesson that COVID taught us, and you can't sort of bet on certain markets and say, oh, I'll move into that market when prices are high, because it will be gone by the time you are able to make the move. So having the exposure is important.
All right, thank you. And one question from me is, how easy or difficult would it be for people to actually like venture into doing this silicon metal? What kind of like capex is involved, in setting up the furnace to process this?
Yeah, well, I mean, the capex would be in tens of millions. I mean, so 50 to 100 million or so, depending on how many furnaces you're doing. So that may or may not be prohibitive, but I think the know-how around, so there's a hard know-how in terms of actual processing, right? Where you need metallurgists and people like that, and be able to know how to troubleshoot issues, because there are a lot of plants that commission maybe with just slight parameter issues, and if you get the wrong person, they will not necessarily be able to troubleshoot and understand what the issue is. So that's a hard sort of know-how. In terms of soft skills, I think, how do you manage the cost of a smelter, and how do you sort of manage distribution? I think that is actually quite a difficult barrier to overcome, and I think that is part of what we bring, the value we bring to the business, right? So sort of going back to what I was saying earlier, you need to be able to, because commodity cycles come and go, you need to be able to really sort of hold your ground when prices are really bad, and you may be loss making, but how do you bring those costs down, and at the same time having the discipline to manage your sales. And then on the flip side, when things turn, when geopolitics really sort of dislocate, how do you move fast? I think these things are sort of more difficult to pick up, and that's sort of what management brings, both hard and soft, in terms of, we've been doing smelting in China for over 15 years, and we started off actually as a distributor of manganese ores and alloys. So in a sense, it's a bread and butter lah.
Okay, all right. One more question from Rondi about this. He wants to understand about the economics of the silicon metal business. What's the cost per ton, the breakdown of it between the different cost components, if you don't mind?
Yeah, so I think we'll probably comment on this when we start producing, because then the numbers, because until now it's all feasibility, right? So it's better to comment once we have actual figures lah. But suffice to say, right, I think the energy intensity of producing silicon metal, for now, you can assume probably it's not quite double, but almost double that of ferrosilicon. So that gives you a sense of like the cost component. So energy is a much bigger cost component of silicon metal compared to ferrosilicon.
All right. Okay. Hope that answers your questions, Rondi. Shafiq, back to you.
All right. Yeah, this is another question from Rondi. How long will OM take to produce semiconductor grade purity silicon metal produced by those Japanese material player, right? So what are the barriers to get there?
Yeah, I think actually a lot of what I said earlier will get us there already, so again, unfortunately, it's a very simple answer. It's really just optimizing the supply chains and figuring out how do I get the highest purity, and how do I make sure that I don't lose any silicon as I'm producing it. How long it will take, I just now I said maybe 3 to 6 months to optimize, but I'm not sure if that will be optimized to, say, I don't know, like a 4 series kind of product, or really reach our target lah. So probably I'll reserve my comment on that until we actually deliver.
All right. So this is question. I'm not sure. I don't think this is related to metal silicon, right? But yeah. Let's take this question from Flo. Please share your power cost in terms of kilowatt power, right? The way it carries the cost composition along with the other reductants.
Okay, so I can't share our actual cost of power, sort of per kilowatt hour terms. One, it depends on exchange rate, and two, every year it increases slightly. Okay, but generally speaking, I think when you read reports about Samalaji Industrial Park and Sarawak Energy Power, I think people have often said 4 to 5 US cents, depending on all the factors I mentioned earlier, and that is not inaccurate, I would say. But again, I have to stress it really depends on the exchange rate and where you are in terms of the lifespan of the power contract. In terms of the weight it carries and the cost composition, right? For ferrosilicon, I would say between 40, say around 40%. For certain countries, it can go up to 50% if the cost of power is high. But for us, I think it's around 40%. If again, if I remember the numbers correctly, and this fluctuates as well. Again, because the cost of reductants, in the last 12 months have gone up so much. For manganese alloy, it's probably around 30%, so it's smaller because manganese is less power intensive, right? But again, it also fluctuates a lot because the price of manganese ore can go up very, very much. If manganese ore is at $8, then the share is probably, power's share of cost would probably be 20%. See, I'm just throwing those numbers out, but just to give you a sense of the sort of sense of proportion of where power sits in the scheme of things.
Right. I don't think that's a metal silicon related question, right? So I think we can move to others section. Can Terence?
Yeah, sure.
Yeah. All right. So question from me. What is the status of the court case for the mining division?
Okay. So there have been some, there's been a few back and forths with, going to court and waiting for the hearing and so on and so forth. But I think for us, for the company, we put out a statement shortly after the incident to say that NT works safe. The charges that have been laid out against the company with respect to that release they put out, we believe that is not materially representative of the likely liabilities of the company. And the reason why is because they have taken one incident and then multiplied it multiple times to say, oh, this is the maximum possible that the company can be fined. And so, but it's one incident. You look at it one time. So again, it's our view that it's not representative. But I think I probably will reserve my comments until the case has closed and has been settled, and then we'll be able to sort of make an announcement around that. But yeah, our view currently is that it's not material.
Right. This is question related to lockdown in China, right? So what is the status of labor shortage over there in China?
Yeah. Okay. I think probably what Bernard is asking is because earlier on we said, I think last year I said, because of the lockdown in China, we are not able to get Chinese workers into Sarawak. And the situation today is that we are okay. We are more balanced in the sense that we are able to run the furnaces that we want to run without these constraints. It's difficult to say how long the situation will persist. We have been able to get people in, but let's say next year when we are trying to run 16 furnaces, right? Because now we're running 10 to 12, right? It's okay, but when it comes to time, when it comes to the time for us to ramp up to full production, then there may be a slowdown in that process because of what's happening in China. But then again, will there be lockdowns in China in 2023? I think that's a very difficult question to answer. So we'll see. It's really an evolving process. So we'll see what the labor situation looks like next year from China. But for now, what we can do is fast track sort of hiring within Malaysia. And I think we shared this in the past as well. We're feeling from bottom up, right? Because it's easiest to train the junior level. Because for example, for furnace superintendent and above, right, you need them to make decisions sometimes very quickly. If something is wrong, if the furnace looks off, if for example the voltage today is very very different, or like something smells different, or like the fire shouldn't look like that, then you need them to be able to make very very fast decisions to say shut down the whole thing. There may be a safety lapse, or like there may be some incident that we don't understand. So I think that experience takes time, and that is the real hurdle that we're trying to overcome. I think we have been operating for quite a while now. So I think some of our staff have sort of, in a sense, risen through the ranks, and we're trying to fast track to have the first local Malaysian superintendent as soon as we can, because then that gives everyone a sense of like that is realistic and feasible, and possible to completely localize the staff. Which at the end of the day, that's the goal.
Right. Last question from me, right, before I pass to Terence. Do you have any update regarding the acquisition of 35% stake in OM Sarawak and OM
Okay.
Samalaju?
Yeah, OM Sarawak and OM Samalaju, right? So the CPs are to be completed this month, and then after completion of those CPs, we'll have 60 days to complete the transaction. So I think we're still working on that. There are a few outstanding CPs, but I think you will see that a lot of them, have sort of being completed, or in the process of being completed. So these are like, to sort of give you a sense, these are like shareholder approvals, lenders approvals, Sarawak Energy approvals, and so on. So we are still in the process of doing that.
Right. So neatly assume that you get those on a bargain price. Any comment on that?
Well, I mean, thanks. Thank you, Nick, for that comment. I think appreciate the sentiment. But I mean, it's how should I put it? OM Sarawak is really, in a sense, where we would like to grow, right? For OM Holdings, right? Because that's essentially we sank a lot of money into it, and we really believe in the fundamentals of the project. And I think for CMS, they have been very supportive partners, throughout the years. And so it's in a sense it's a good timing, because I think they're also looking at pursuing sort of different ventures, and they want to free up cash, so realize their investment gains from this process lah. So yeah, I mean that's probably what the way we view the transaction lah. So it's sort of win-win at the right time for both parties.
All right. Yeah, Terence.
Okay, all right. Thanks, Adrian. Thanks, Shafiq. I'd like to touch on a little bit about the energy crisis that's unfolding, in around the world at the moment. And yeah, there's a question from Elaine here, where she says the recent ferroglobe closing down plant and Mongolia news. I suppose she's referring to the news that Mongolia will not give preferential rates anymore. How does it impact the industry?
So, ferroglobe shutting down smelters in Europe, right? Especially, when I mentioned earlier, continental Europe, the furnaces are in France and Spain. Is really just a result of rising costs, right? And I think I read somewhere in one of the news articles where someone was quoted as saying the cost of producing ferrosilicon is 3,000 euros per ton, right? So I mean that it's quite a crazy number, but so it just has to happen. It's part of the commodity, cycle where when things reach a certain level, then production goes down. But obviously, the issue here is that there's a big delta between Asia price and Europe price, and so we do sell some of our products to Europe, and historically that has been good. There's some times where it has not been good, um, but in a responsible way, right, and not sort of bring down the entire sort of European market. So it's a good thing. I think it just means that the industry as a whole is digesting inventory and sort of cutting back on production. The Mongolian news, right? There's so yeah, it's about the power situation in Mongolia and the sort of the preferential rates. But I think um, a lot of the most competitive smelters have their own coal operations. So in a sense, they are hedged both ways. If you know what I mean, because they're also making from generating power. So for those strong players, the larger ones, it will not affect them so much. It will affect sort of the medium-sized guys probably more. But besides Mongolia, when you look at sort of province breakdown in China, I think Ningxia is the one that cut the most. They seem to be the marginal supplier to China. So those guys have shed a lot. I think probably they're already at the edge of the cost curve.
Okay, all right. And a follow-up question on similar. I believe you already addressed this earlier when you're talking about the supply, demand, and cycles. But SL here asks, with the energy prices going nuts and China's power rationing in certain places, why has the metal prices not gone up significantly?
Yeah. So that's right. I mean, it's more to do with inventory and outlook lah. So if I'm a steel mill, I have 4 months of inventory. Now I have 2 months. My boss tells me that you need to reduce to 1 month and don't buy so much. Then that creates the kind of psychology for the entire market to be depressed. And it's not just the end users. Sorry, just to add on, it's also the traders. The stockists, distributors. They also release a lot of material into the market and stop buying because they don't know when the price fall will stop, right? In a sense, although actually it has sort of stabilized now. So it's just this collective mentality and the fact that there is a lot of inventory, in different hands. Doesn't matter whose hands it's in, and that demand for now is quite subdued lah. So until, but in a sense, this when things get pushed to extremes, they tend to rebound a lot more. So it's the low prices are the cure for low prices, right? And high prices are the cure for high prices. So it's just setting up for the next cycle lah. I mean that's probably I can see.
All right. Okay. Thank you. Okay. So actually, that means the prices of the silicon metal that is being sold is not so much affected by the higher cost of energy that the producers in Europe, for example, it's not like a cost plus model, is what I'm trying to say.
Yeah. So but the another way to think about it is let's choose ferrosilicon as an example, all right? So China is trying to get rid of stock, right? Now they have too much inventory. The most expensive guys have closed already, say 20% have closed. More will close as it goes down. But this price level, right, even if you pay shipping and pay taxes and pay everything into Europe, it's still lower than $3,000. So obviously the European guys then have to close. Then the question is, how will buyers decide who to buy from, and what will set the market price? So for now, I think it's still the market is quite mixed, and there's really no clear direction because no one really knows what the demand situation in Europe will look like. I don't know, 2 months as we approach winter, right, basically.
Yeah.
And so when the market is very mixed and there's no liquidity, then prices are very splotchy. It's quite high volatility as well. So then it really depends on the specifics of the trade. Like, are you asking for material next week? Then Chinese people the Chinese can't ship. Or are you asking for a certain spec of material? Or are you asking for material in a certain location? So it really depends on these things. But yeah, I think that's the general idea behind the low prices.
Okay, I see. Thank you. And on this topic, does OM Holdings do any sort of like a commodity hedging for the products that you sell?
Okay, so there are no like exchanges besides the one in China, in Zhengzhou. But the problem with the China hedge is that if you want to deliver, you have to pay VAT. So 13% is gone, from that.
Wow.
And if you want to, if you bought material to say perform a certain contract, right, then to export you have to pay export tax, which is 20% for manganese alloys and 25% for ferrosilicon. So both ways doesn't really make sense, unless the China and non-China prices move apart by more than 20%. Then maybe 2 years you can do it once, but you have to be very careful doing it. So I think as a general policy, we are just selling spot. um, uh, and I would say 50% is really spot. So I'm selling fixed price next month, N+1 delivery or N+2, N+3, and the other 50% is referencing this price, but it's on a long-term basis. So these would be index pricing to most of our major customers in Japan, Korea. Yeah. I mean, these would be sort of top 1-2 mils in those countries.
Okay, all right, thank you. I think mindful of time, right? It's almost 10:30. I'll just maybe end the questions on this for now, and maybe talk a little bit about the listing and the share related kind of matters, especially since OMH is like a dual listing from Australia to Bursa. So there's a question from Boss Nick here that's asking, for Malaysia now, what's the kind of float? Is there a lot of liquidity in Bursa for now? For your shares, I mean.
Okay, I have to. Sorry, I must confess, I don't have the number offhand. I think it's between 10 to 15%. That is on Bursa now, and most of this actually has been moved organically. So a lot of shareholders have bought in on ASX and then transferred their shares to Bursa. So yeah, that's about 10 to 15% right now.
Do you have any idea about institutional holdings for Bursa Malaysia?
Yes. Okay. So that's $1 million question. Look, I mean, the thing is that when we conceive of the secondary listing, dual listing in Malaysia, right? The strategy was to build institutional following. Okay, and so one key thing was actually the Sharia compliance status, which we just received a few months ago this year, right? So that actually helped a lot. But from the time that we got it, and all the due diligence and research being conducted, it's actually taking some time, and obviously we are in a risk-off scenario now. So that has actually dampened things a bit. But I think the interest is there. The questions that we get from analysts, as well as sort of buy side analysts and sort of fund managers, has been quite consistent. Every week we'll get a few questions. So I think people are working out how they want to come in a meaningful way, and we have also had discussions around potentially doing a placement earlier on in the year, but obviously with the share price at its current level, I think management is very mindful that dilution is something that we need to avoid at current levels, because it's detrimental to existing shareholders, and it's not fair to them in a way. So I think so there are a few bits of the puzzle that we have to look at before people can come in a sizable way, right? Because at the end of the day, you do want institutional shareholders to come in, because one, liquidity will improve, and two, I think market awareness and will be much better, and it's also a sign of confidence. So these things actually are, at the end of the day, right? That's the end goal behind the Bursa secondary listing. So I would say it's not complete. The exercise is not completed until we do all these things. And so a lot of shareholders have also asked us, both on mainly retail, and I guess bear with us. It will take some time, but the interest is there. It's just really how you unlock it in a way without damaging the interest of current shareholders, and unfortunately, it takes time, especially with the larger funds.
Okay, understood. Thank you for sharing about this, Adrian. All right, so I think we've answered almost most of the questions, maybe 90+% of the questions. And considering we dragged on about 1.5 hours, which I think is perfect timing so far. Maybe we can start to wrap up.
Okay.
And, yeah. But thanks so much, Adrian. Thanks so much for taking the time to really not just answer the question, but also give much more than what people ask. And I think that's really very meaningful to the audience who tuned in tonight. And already we can start to see there are quite a number of appreciation messages. Where SL, he praises, Adrian and OM's corporate governance is top notch, which I agree. In fact, I was so surprised, that OM Holdings actually make announcements practically every month about all the updates, and you host your own live briefings for investors every quarter, I believe.
Not yet, but hopefully we'll continue the pace doing it. Yeah. So I mean, the thing is that actually it's quite opaque, right? So that's something. I mean, that's feedback that we get quite often from investors. They can't figure out the cost, or they can't figure out what the selling price is, what the company's strategy is, and especially the question you asked about the listing and the shares, right? Because liquidity has been very low. We are aware of that. So it's important, I think, to share because otherwise, could very well imagine that management will not do anything about it. Like time passes very quickly, so it's important to share.
Okay, all right, yeah. So very good job, and kudos. I love to see this kind of companies, really. And
Thanks.
more Rondi say thanks for lianing all his questions.
Thanks for the questions, Rondi.
Isabel here, super informative. Thank you for your time.
Thank you,
Amar and Marvin. All right, so I think without one of the most transparent companies. I do share the sentiment. So all right, so without any further ado, once again, thank you so much, Adrian, for taking the time. It's 10:30 at night already, for coming out here and sharing about OMH and all the operations, the plans, and basically everything that people ask, you also answer already. And thanks to all our audience for tuning in. It's been a great night. Look forward to our coming up sessions too, and we hope to see you on Stockbit. All right, so take care, everybody. Good night, stay safe, and we'll catch up again soon. Bye-bye.
Bye.
Good night.
Bye.
Thanks.
Okay.